Hello traders, welcome to Investoo.com's introductory guide to stock indices. In this lesson, we are going to talk about how to swing trade stock indices on the long side. Now, we are going to look at, right now, we are looking at the E-mini S&P 500 for our chart. Now, and if you look at this price action right here, you can see that it's not very, well, or it's not going to be very comfortable to trade the long side on this market. Now, if we go to the daily chart, you are going to see that long opportunities come after a dip. So we are going to buy dips from previous areas of support or previous areas of broken resistance, right? And that is what we're going to do. And we are no longer in this very strong market that we were, for example, from 2012 until let's say right here until the end of 2014, where we were hitting all-time highs. That's no longer the case. We encounter some choppy ranges, such as in this case, and then this case and this case. But the overall look on the S&P 500 long sides can be very profitable. Now, how are we going to do that? Well, you can do it from the daily chart or the 4-hour chart. I would consider doing from the 4-hour chart just because, well, the entries can be more precise. Now, just take a look at what's going on right here. Let's say that we wanted to trade the last piece of the E-mini S&P 500, but we are going to look for broken areas of support and resistance. Right here we have the first one, okay? This is an area that was tested heavily. You can see that this is the area that broke to the upside, then was tested once, twice, 3 times before going higher. Tested again here, faked out of right here. Well, this is actually the position that we are going to be looking to trade. So basically, this is a very strong area. Remember, support and resistance are areas. They are not just horizontal lines on your chart. So what are we going to do here? How are we going to calculate the correct stop loss for our trade? Well, that's easy actually. We are going to look to or for the entire zone. And the entire zone goes all the way to this low. Why is that? Because this is the area that was tested as resistance, then as support before we broke with this area that was retested as support. So basically what we want here is we want to put a buy limit, and we are going to put our stops all the way here, all the way down here. Remember, we are swing trading these stock indices. We are not day trading them, so your stops are going to be a lot wider. And in this case, we are talking about a 20-point stop loss. That's 80 ticks on the E-mini S&P 500. And we are just going to wait to get filled. When we get filled, well, we have to decide on our targets, okay? And basically our targets are going to be the next very pivotal area of resistance, because we are going long of an area of support. So we are targeting a pivotal area of resistance, which is this one right here. Now, remember, these are areas. But because these are areas, we are going to be targeting them on the low side. This means that our targets are going to be all the way up here, and we are going to be targeting actually around 61 points. So we are looking at a 1 to 3 risk to reward ratio. And if you look closely, well, this trade got filled right here on the 18th of May, and the targets got hit on the 27th of May. So basically 10 days of holding this long position on the E-mini S&P 500 to make a 1 to 3 risk to reward ratio. And you are going to be doing this all over the other indices such as the Nasdaq, the Nikkei, the UK 100, which is the FTSE. And remember that these long-term positions don't come very often, but when they do, they yield great results.